Let's get you up to speed on the minutes from the central bank's March meeting. They were released about an hour ago, and they show some participants considering pausing rate hikes in the wake of Silicon Valley's failure. But with inflation still too high, the consensus was to keep raising rates, and we got a quarter-point increase. Some participants even noted that if banks were not a concern, they would have considered a 50 basis point hike, Seana.
And a document released alongside those minutes also revealing that the Fed expects a mild recession later this year because of the banking crisis. Projections indicating that Fed officials expect GDP growth of only 0.4% for all of 2023. Our very own Jen Schomburger spoke to New York Fed President John Williams yesterday. Here's what he had to say about the impact of bank failures on the Fed's decision.
I do think that the bank failures add to uncertainty about the outlook, and we'll have to take what actually happens into account. But fundamentally, my view is we have an economy that will grow modestly this year. Unemployment will probably edge up over the next year somewhat. Inflation will come down.
So that was New York Fed President Williams there yesterday. But Dave, the big takeaway here, I think, is that projection, the warning here about a recession because of the bank failures. And I think largely many people were saying maybe we don't need to be as worried about some of the turmoil that's going on in the banking crisis. Maybe that was more of a one-off that's not really going to affect economic growth here in the second half of the year. It sounds like, at least from this, that the Fed officials think otherwise now.
Yeah, and I always like to see some disagreement among the Fed. I think that's a positive takeaway for me here, is there is actually a little bit of disagreement among the Fed, because for basically the last 9 rate hikes, it's been essentially a flat line. When we talk about the dot plot a lot from our friend Julie Hyman, there's not a lot of disagreement. So there is finally some doves beginning to break out. Austin Goolsbee yesterday suggested maybe it's time to step back. But overall, if there's one lead, it's that, mild recession is factored in, and maybe they're banking on it, given they already raised 25, considering a mild recession is already factored in. That, to many, would be a little fearful, that they're already banking on, in fact, counting on it, and raising rates nonetheless. So it'll be interesting to see what lies ahead.